Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, March 31st, 2024. Happy Easter to everybody, and I guess happy Transgender Day. Anyway, so Friday was the last trading day of the quarter. We got a little couple volatility blips, but nothing really. It just kind of maintained where it was, and it was another decent day for the credit spreads that we did because we were able to identify where the range was, and there was really no sweat at all on it. One thing that I've been saying is that when you get into the last hour of trading and you're within 100 or 200 points in that range of your max that you can get, just take profits because especially when you go towards the end of the quarter like we were on Friday, you're going to get some crazy moves in both directions. So, just take it and you rinse, repeat it on Monday. And, we look for the ranges and we go from there. So the range right now that the options market is identifying for Monday is a high up near the 52.75 and a low 52.31. Doesn't mean it has to stay in here. It's just saying this is what the options are pricing in. So if you notice here, this is the trend line that I've been following for quite some time. And, if we have it where the bulls are going to reach the top of it, then we're really, what we'd be looking at is this range going up somewhere into the right around that 5300 level. So I'll go over the other ranges that are a little bit further out, but right now this is what we're looking at. We do have some bearish divergences, so looking for some backing and filling would make sense on Monday, but it's also the first trading day of the quarter, so we can get mutual funds and stuff like that, IRAs, whatever the cash is in, going to work. So sometimes the first couple days of the month is bullish. So but from the technical aspect, I'd be looking for a move somewhere down into the 52.46, not really that far below, but really this support zone anywhere from the 52.31, which the options market is pricing in, down to the 52.05. This is the support zone where I believe that we will see buyers step in here and try higher. If they lose it, that's when we start looking at the lower end of this of the channel, which is going to be anywhere from the right around that 51.95 down to the 51.83. So this is the kind of an important support area. If we get here and then they decide to come up and just stay within this channel, then we'd be looking a little bit higher, and I'll go over that during the week. So if we take a look at the 60-minute chart here, again, this is for the week, what the options market is pricing in, 52.06 up to the 5300. So basically, it's giving a range between the 5300 and the 5200, which is pretty much right in the middle of where we closed on Friday. So that kind of makes sense on it. They don't really know what's going to be playing out right away, but this is what's pricing. So if the bulls can get above the highs that we made on Friday, anticipate we're coming up to the 5302. If we come down to this range, again, I'd probably be anticipating that we have some buyers waiting anywhere from the 52.20 down to the 52.06. And you can see we have these bearish divergences that have been going from here, but they've pretty much been ignored. And being we did make a little bit of a higher top on Friday, our new all-time highs, we kind of do have some bearish divergences here. But as people have followed me for a while, we typically look for something a little more defined than this right here. But the thing is that if we continue higher, most likely we are going to get these sell signals, and that will probably just open the door for a larger little break. But as our members know, that we've been looking for a time period for a top, and we're approaching that fairly quickly. So you want to pay attention, because if we have a hard break to the downside, you really want to acknowledge it, because it would be fitting the time period that we've been looking at for a top, and that's been coming all the way since November. So again, on the upside, if they could break through it, we're looking somewhere around that 5300. If they can get through this support right here, then we'd be anticipating a move down to the 52.23 down to the 52.06 level. So daily chart, this is what we're looking at as far as a range. We're going it's pretty much right around that same thing. They're looking right around that 51.50 up to the 53.67 level. So this is the range that we would be anticipating, and this is more on the monthly level what they're looking for, which kind of does fit this profile with the wedge that we're in right here. You can see we have bearish divergences, very overbought. So that's what I'm saying. If we see a hard break coming during the time period that we're looking for the top, pay attention, because everybody's been really, let's say, trained to buy the dips, and they've been right since November. So when people aren't really fit to be able to fight, meaning that, you know, they become lazy, everybody's been making money on the upside, they're going to keep doing the same thing. And what happens is when they start buying and then support doesn't hold, they look for the next support level, they start buying there, and then what happens is when we break that and we start heading down lower, and now you have all the perma bears coming out saying that it's the start of a new bear market, and all the bullish talking heads vanish like they always do, people start to panic selling, and that's when we start looking for the low. So I mean, to me, I really am not ruling out a test of this 4670 area, 4678, for the sole reason that we have not done a touch of the 200-day moving average since we are all the way back in October. And if we just kind of look out, you know, typically we get these moves and they do get tested. So hang on one second. Okay, so what I was saying is that, you know, usually we do get some kind of test of the 50-day and the 200, and I'm not ruling it out. I'm not saying we're gonna get that low, but seeing a test of the 200, or even coming down and testing some of these support levels, would make the most sense, especially when we're looking at that interim top to be made, you know, like I said, in the not so distant future. So upside, again, what they are pricing in with options now for this coming month is a top up near this 53.74 and a bottom 51.35. So this is the range that the options are pricing in as well. Again, bearish divergences. So right now, I'm going into tomorrow open-minded, just because we don't really have any defined sell signals. We do, but not really. So if the bulls can get above these highs, expect to move up to the 5,300. If the bears can put some pressure on, then look for a move coming down to the 53.23, 52.06 level. If that gets broken, that's when we start just identifying some other support areas. So one last thing I just wanted to show you. This was the trade that we made on Friday. Again, it was $5,000 buying power. It was a $1,200 profit. If you left it till the close, like I said, I pretty much recommend to people, when you go into the last hour, just take the, you know, at the time it was plus $900, $950. Just take those profits and then wait for Monday, instead of you know, looking for, you know, where we could possibly get some big moves. And that did happen when we were plus 900. It went to down 100 or down 50 in that range. It still would have been a break-even trade either way, just because of the way the trade was set up. But, you know, you had to just kind of sweat it out with those, you know, it was literally like 20 minutes worth of trading that where they were trying to press price higher. So, you know, if they took the profits, it was $900. If you left it to the end of the day, a little bit of sweat, but it was a $1,200 gain. So with that, enjoy your Easter, and I will talk to you guys in the morning.